Now, if rate cuts are on the table, if they start to come on the table, the landscape changes a lot here, folks. I'm going to bring in Rob Luna from Rob Luna Wealth Academy, the founder there. So, Rob, this is before 12 months before the rate cuts, and then after the rate cuts, and it's so compelling to me. You can really see a changing of the guards. First of all, I want to get a thought from you. Do you see rate cuts coming this year, and what time frame do you have?
I think more than likely we'll see something. I think it's 1 or 2 cuts, though, not the 6 that were being predicted coming into this year. And I think it's probably third or fourth quarter. So all that fuel that we were thinking was going to be coming from the Fed, I don't think you could be pricing that in anymore. And that's what we're seeing in earnings play out, Charles.
Do you think they happened before or after the election, though?
Yeah, that's the million-dollar question.
Yeah.
If I had to bet on that, I would probably say after.
Okay, because here's the thing. We're looking here, again, if they're going to be after, then that means 6 months away. You still want to be in the winners. Communication Services does pretty well, but you do see a shifting of the guards. Staples start to really rock and roll. Financial start to rock and roll. Industrial start to rock and roll. And we're kind of seeing that, aren't we?
Yeah, and that makes sense, right? Because the market is forward-looking, and we've all been trying to jockey for position in a lot of these high-tech growth companies with the idea that the Fed's going to cut rates. But when you look at all those names, Charles, they've skyrocketed already. And when you see them coming out, even if they are beating revenue and earnings, if that guidance is slightly light, you showed that foghorn leghorn moment, the woodshed. That's what they're getting, man, beat over the head.
Golly, I mean, I cannot believe the amount of damage that's been out there. But still, the market's up. This is still really a very strong month. I mean, could we say there's clear sailing ahead? Maybe a few speed bumps, but pretty much clear sailing, you think?
Well, I think it's exactly, if you take a look, and I think this earnings season is really important because I think this is this inflection moment where you're really seeing you have to find the companies that are going to be able to execute going forward, and the ones that are going to get hurt are not going to be doing well. The other thing I think is really interesting, Charles, I think, we've been kind of prolonging this recession or whatever it is, and I don't necessarily know that it's going to be a recession, but I do think the average consumer, talking to McDonald's owners, even talking to my barber the other day, they are slowing down. The middle income is being squeezed. They're not renting Airbnbs. They're not going to fast food. They're pulling in. And that does have me a little bit worried about this economy right here.
Yeah, I know McDonald's struggling big time. I wish I could pull up a chart. The stock is really showing it. They're really struggling, trying to find that sweet spot. Plus, a lot of these artificially induced wage increases across some of these states. Hey, let's talk about your stock picks here. Pretty interesting group. Let's start with American Express. It's interesting here because the last time they reported, they said millennials are spending like crazy, even Gen Z. But do they have the kind of powder to keep that going?
Yeah, I think they do, and that's really more of a lifestyle choice. 60% of their new customers are Gen Z people, and so those are the ones that are spending more. And those are the ones, if you look at American Express, those are the haves versus the have-nots. So I think American Express is isolated right here. This is a best-in-breed stock. I would like buying it on a little bit of a pullback, but this stock continues to skyrocket.
Chevron, you like Chevron? It feels like crude is in this sort of a range bound right now. The narrative comes and goes. China's economy, the Middle East skirmishes and wars. But I mean, you still have confidence there? Is it something else about it, like the dividend?
Yeah, I like the dividend. 4%, it's growing. The CEO just came out and said they see 10% plus free cash flow, not only for this decade, but for the next decade. And that's when you're looking at what you want right now is transparency to future earnings. And I think if people are starting to look for something a little safer, I think Chevron's a name you'll start to see some money come out of tech and into a name like Chevron.
Well, money's been coming out of tech and into utilities. Dominion. This one is on your list here. Listen, utilities, I don't think they're going to be able to lead the market back, but they've looked really amazing the last couple of weeks.
Yeah, I love Dominion. I think this is actually an under-the-radar cloud play, Charles. They're based primarily in Virginia, where you're seeing all these big data centers moving. They're going to put 15 new centers on the grid this month. The stock got beat up a little while back. Great dividend. I think this is a good bounce that you're going to be able to get over the next few months from Dominion.
I like your thinking there, my man. I like your thinking. Rob, thank you so much. We'll talk to you again real soon.
Thanks, Charles.